Hi everyone, I am Terri Fenelon.
And I am Lloyd Odell, and we are Terri, Lloyd and Company.
So we're here today to talk about our March market update for 2022. Now we just got back from Keller Williams Family Reunion. What's Family Reunion?
It's our annual convention.
So it's about 13,000 agents. We all converged in Orlando, Florida, where we were able to connect with each other, learn a lot about the market. We had a great event with some high-level executives, Gary Keller, Jay Papazan, Jason Abrams, and what did they share with us?
Basically the numbers that's driving our market, where it's been, especially last year, and where it's looking to trend this year.
Yep, absolutely. So let's dive into our first one, home prices.
Our first slide is home prices annually. So last year we hit a record high. That median average home price in the United States was $347,000.
Wow.
And that's up. If you look at the slide here, you'll see that average appreciation is typically about 4 to 5%. So annually we should be around 343,000. So last year was the first time we've actually went above that since the crash of 2005.
And what do you think is driving that right now?
Well, there's a lot of things that's driving that. So going on to the annual appreciation on slide number 2, we've had some dramatic appreciation over last year. The average across the country is 17%. Our normal average is anywhere from 4 to 5%. So we haven't seen 17% growth, I don't want to say ever, but not in my lifetime.
So looking forward into our inventory, what does that look like for us right now?
Yeah, another record year of low inventory. So as long as they've been keeping track of this number the last 40, 50 years, it's been the lowest it's ever been. So on average, it was 2.3 months supply of inventory. So if no homes were listed, it would take 2.3 months for all the homes to sell.
Wow.
All right.
And we're certainly feeling that right now.
We are. If you're a buyer, you're putting in lots of offers, and as a seller, you're getting lots of multiple offers, pushing that price up. So it's very challenging for a buyer and very exciting for a seller.
And it's really exciting for everybody in the industry, really, because we all have to be at the top of our game.
Yeah, absolutely. It's much different than it was a couple of years ago. So how we market properties are different. We're selling the properties are different. So it's certainly a sign of the times.
Absolutely. So let's step back and talk about the monthly supply of inventory. So we've got a really nice slide on that one.
So last year the average 2.3, but if we look at it on a monthly basis, it's pretty interesting. We hit our lowest point just December of last year, 2021. It was down to a 1.8 month supply.
Wow.
So when we look at the market, say it's a buyer's market or a seller's market, we're looking at this number. And 6 months is a balanced market. Anything over 6 months is a buyer's market. Anything under 6 months is a seller's market. We've never seen a seller's market like this in our lifetime.
And again, we're probably not going to see it again in our lifetime once we get past this market.
It's doubtful.
So what does that look like with regards to mortgage rates?
It was another great year for mortgage rates, where our average was 2.96 for the average 30-year fixed. Yes. So if you looked at historically over the last 50 years, our average was 7.81.
I think my first mortgage was like 8.5.
Absolutely. So if you look at it just short term from 1990 to the year 2000, that average rate is 5.97. So we're dramatically under that. However, with things going on, that certainly changed. We've been talking about interest rates going up. They actually jumped first quarter of this year much faster than we thought. So we've seen interest rates that were up to 4%. With everything going on in the world. The rates certainly jumped up. And we're seeing those interest rates being a lot more volatile right now because of the insecurity in the markets.
All right, let's talk about affordability.
Yes.
What does that mean, and what does that look like to our buyers?
Yeah, 2021 was still a great year of affordability. So if we look at this next graph, and what this is looking at is the median household income and how much of a percentage of that goes to pay for the mortgage payment. So last year that average was 16%. All right, if we look over the long-term average, that's 20.3%. So homes are still remaining very affordable with even the prices going up because of the low interest rates.
Absolutely.
Yeah, however, that's starting to change. As interest rates are going up, as prices are going up this year, they're not going to be as affordable. So it just goes back to, if someone's thinking about making a move, sooner is certainly better than later.
All right, so let's talk about inflation.
Yes.
Looking at the high rate of gas right now. Jeez.
Yeah, we're seeing everything. Prices have certainly gone up on just about everything that we're purchasing. And so it's interesting about real estate. So this graph really puts things in perspective. So we look back at some costs of a car, gas, housing, and wages of what it looked like in 1989, and we compare what it looked like to 2021. We adjusted for inflation. So the interesting part of this, let's look at housing. The average house in 1989 cost $94,000.
Wow.
Yeah. So in 2021, it was almost $47,000. Adjusted for inflation, that should be $218,000. So housing prices actually went up almost 59%.
Wow.
But here's the fun part. Mortgages actually, once adjusted for inflation, went down 24%.
No kidding.
So everything went up. Car, gas, housing, the cost of a home, wages, all went up. Mortgages went down.
So the cost to buy a home went down. The cost of the home went up.
The cost of the home went up, but the monthly payment, because of the dramatically lower interest rates, went down.
That's fantastic.
Yeah. So it kind of puts things in perspective because we talk about inflation, rising prices. People wonder, should I wait? Should I wait till next year to buy a home? And again, we don't know what tomorrow brings.
Right.
We don't make the market, but we are looking at the numbers and we see the trends, and waiting could cost you more money.
All right, Lloyd, so we've run through all of the numbers. And all the national averages. So it sounds like it's still a great time to buy or sell. It doesn't matter if you're buying, it doesn't matter if you're selling. The numbers are showing that now is the time.
Yeah, it's still a win-win.
Don't wait.
Yeah, it's still a win-win for both buyers and sellers. Sellers, typically if you price it right, you're getting multiple offers, more than it's ever sold for before. With buyers, rates are still low if you look at historically. So it certainly has its challenges, but we certainly have some skills and techniques that we're getting our buyers into homes. But don't wait, because the affordability is going to be going down as prices go up and rates go up, and it's not always going to be a hot seller's market.
Nope, it's not. It's not. So if you'd like to get together with us, we would love to have a conversation with you and run some numbers. You can reach us at 248-278-9800, or you can check out our website. It's terrylloyd.com.
We look forward to talking to you soon.
Have a great day.